markets, and this is how I did it. Well, I just went to CoinMarketCap over here to all currencies, obviously. Then I clicked on Bitcoin, and then I clicked here on markets, okay? And here, this is sorted or filtered by volume. So currently, in the last 24 hours, we have the highest volume here on Binance. And then I thought, all right, we're just gonna search for CoinRail right now. So Control F on Windows, CoinRail, and I figured, hey, wait a second. There's so many exchanges listed, or pretty much all exchanges listed over here, which are trading Bitcoin with fiat pairs or Bitcoin with other pairs, but there's no CoinRail. And then I started to do a little bit more research about it, and I figured that, well, CoinRail is not even trading Bitcoin, they're just trading altcoins. And then I thought, okay, let's check the next one, Neo, for example. And then I found CoinRail over here at the very bottom, rank 102, based on volume in the last 24 hours for Neo trades. And to be honest, guys, I do not think at all, actually, that this is responsible for the dip. It has more something to do with the investigation of price manipulation from the CFTC, that they're subpoenaing important or big exchanges. So the CoinRail impact in here, in my opinion, is almost zero. Because remember that, guys, back in 2013, where Mt. Gox was responsible for the Bitcoin crash, well, the situation was completely different. There was 85% trading volume on Mt. Gox. Think about that, 85% just on one exchange. Now, obviously, well, if something is going wrong with that exchange, if they're telling you, well, you cannot withdraw your money anymore, well, that causes panic. And I mean, there is a reason for it, right? But if we check the markets right now, once again, the volume is so well distributed already. Of course, it would be nice if it would be even more distributed, but I mean, there are better exchanges than others. And so yeah, there will always be those monopolies, if we can call it like that. But overall, I think that the trading volume is very well distributed, and I do not think at all that this exchange hack here from CoinRail, even though it's 40 millions, but if you think about it, 40 millions, that's really not that much compared to the 300 billion in the whole crypto space that we still have. I do not think that this was enough to cause this panic.
We've got another 9 Ethereum slated to be given away in the next 5 days alone, and that number could grow if we can lock up one of these for Friday, and it's via the ICO Ask Me Anything section in our Discord. So how to participate, super easy. Join the Discord, the link will be in the description. If you're not familiar with Discord, you can join it 3 ways. On the app on your phone, on an app that you can install on your computer, or just use the desktop version. You can do that as well. The easiest probably is phone, but if you're sitting in front of a computer, the desktop version works perfectly fine. The only other thing you have to do is look for the announcements made in the general announcements section. So I announced we have another AMA and giveaway. This time it's with Hortiu token. It will take place Monday at 2 p.m. They're giving away 0.5 Ethereum each to 6 winners. Very simple. All you have to do to win is ask a question. Just be, they're hour long, be in the ICO conversation section from 2 p.m. to 3 p.m. Eastern Standard Time on Monday, which is 6 to 7 p.m. UTC. Be in the ICO conversation section, ask a question, and you will be one of the entrants into the giveaway. That's all you have to do. It's a really cool way to do a couple of things. A, get exposure and learn about new ICOs. B, interact with other members of the community and other people that you can potentially network with. And C, have a chance to win a lot of Ethereum. That's a lot of money. I want to talk about Wells Fargo. So I got a letter here from Wells Fargo in the mail yesterday evening, and I actually opened it today. I just didn't open my mail. And this is actually dated June 6th, so maybe I missed this. But I'm going to read it to you, and then I'm going to give you my thoughts. Dear Danny, it says Dear Daniel Yelverton, but you know me as Danny. We're writing to let our customers know about a recent change that affects cryptocurrency transactions. Oh, interesting. You piqued my interest. Beginning June 18th, 2018, Wells Fargo credit cards can no longer be used to purchase cryptocurrency. You may have used your Wells Fargo credit card to buy cryptocurrency in the past, didn't. We're providing information below to help you understand our decision. What you need to know, this is their justification. Because of the market volatility and credit risk associated with cryptocurrencies, we will begin declining credit card transactions with known cryptocurrency exchanges on June 18th. This applies to all personal and business credit card accounts. Wells Fargo debit cards can still be used for these transactions. Then they let you know of the helpline and they tell you they appreciate your business. So I'm going to preface my comments by saying that do not ever go, the goal should never be to go into debt with a credit card to buy cryptocurrency. I realize some people use credit cards more than others, and they just pay them off at the end of every month. If you want the points, fine, use it. But never invest more than you're willing to lose, and never go into debt to invest into something. Now, with that said, now Wells Fargo cares about its customers? Really, Wells Fargo? I realize other banks have already done this, but coming from a bank that not only altered documents about business clients to directly affect the commissions earned at each individual branch, that not only had to pay a $142 million settlement over the Wells Fargo accounts scandal, which basically they opened millions of false accounts without the approval of the account owner and people like just citizens like me to meet local bank quotas because they had account quotas at the bank. Not only that targeted undocumented immigrants to hit sales quotas at each bank, not only that had to pay $480 million to resolve a lawsuit related to another sales scandal, a sales and securities fraud lawsuit, and not only that actually has a website called wellsfargosucks.com where you can go put all of your ill-willed comments, whatever you want on this website. Despite all that, now they care about their customers. Really? Maybe I shouldn't be getting worked up about this, but this is a direct shot across the bow, I think, for the banking industry, flipping it around a little bit. This kind of letter shows me that cryptocurrency is a direct threat to their business model. Because you know what? You can buy Forex pairs with a credit card, and you know what those are? Currency pairs. It's just not a cryptocurrency pair because Forex currency pairs are controlled by the banks. Cryptocurrency pairs are not. This, honestly, as mad as that made me when I read it, not because I can't use a credit card to buy cryptocurrency. It made me mad because they're directly targeting cryptocurrency users, enthusiasts, and investors in a banking industry that has no essential correlation other than we buy it with fiat. It made me mad, again, because they have no regard for their customers anyway, but it makes me happy because they're terrified. The banks they're scared of cryptocurrency. Because if you know anything about the space, if this is your first cryptocurrency video, welcome to crypto, first off. Second off, blockchain and associated technologies are a direct threat because they do not require a third-party system. That's what trustless, immutable, published public ledger is. That's what that means. So I took this as a not this is like a drastic backpedal in terms of, oh shit, we can't have this happen to us. Nope, can't use it. Nope, get out of here. Yeah, you can still use your debit card to do it. Yeah, sure, if you want to use your debit card, fine. People use credit cards, whatever it is. But they're disassociating cryptocurrency with currency pairs. That bothers me. It should be the same thing. They're used sometimes for the same purpose, sometimes they're not. And I get it with the regulation. They want to monitor it. But this set me off a little bit. And without ranting too far, I'm gonna cut this off now for the sake of repeating myself. But I hope this gives you the same sort of feeling that it gave me when I read this letter.
On the short term, on the exuberance, on those December-styled gains. They want it to be easy. And they're not willing to learn about both the fundamentals and then also the psychology of markets. This is the big point I want to drill in here, folks. That when you have lower levels of volume, it is not a period to get fearful on something. So long as you're seeing price strength confirmation and you know the fundamentals are at play, you want to see lower levels of volume. You want to get greedy during this time period. Now, we do want to see higher levels eventually, but during the periods of low volume, where the fundamentals are sound and price strength confirmation is signaling, you definitely want to possibly get greedy at these levels. Now, I'm not going to tell you guys to buy anything. I'm not going to tell you to sell anything. I'm no financial advisor in that sense. But as you all watch the channel, I want to share with you guys my philosophy and where I stand on this. Because I can tell you guys, even though price isn't exactly exuberant at the moment, it's not going to be in a low liquidity market where, again, we're not seeing any volume yet. We are still seeing some serious signs of price stability and price strength confirmation. The excitement of possibly seeing upside here at the current levels. Now, why are we seeing this, and what are some of those indicators? Well, first off, again, markets tend to cycle, especially in crypto, around a 70 to 80% correction after we have one of these major run-ups. We've had that. We had that going from 20,000 down to 6,000. We had a nice steady correction close to those levels. But along with that as well, I think many people don't realize what price is really telling us here. Many people are looking at the fact that, you know, we've been staying on the lows. We generally look at the highs and the lows. The big thing we should really focus on here is not only did we have a great year in 2017, but we really had a nice steady uptrend here, one that was relatively rational with the growth of adoption. And then we hit this period mid-November and then throughout December and January, where we just went parabolic. And there's an importance to keep it here on not the logarithmic chart, but the standard chart here, because it shows you when there's a period where things got too ridiculous, things got over the top. And you can tell that really the last base before we moved up like that was down here around the mid 5,000 range, okay? But we can see that, you know, I use this analogy as well, that you go, if, for example, this is when you're during a bull market, you're having a good time. It's what people use in regards to traditional markets as you got the punch bowl, okay? And everyone's having a good time. They're drinking, partying good, things are going good. And then eventually the punch bowl gets tipped over, or you run out of the punch. And people get hit by the hangover the next morning. The party's over. And it doesn't feel good. You know, many people were expecting that the party was going to go on forever. And then eventually you come down. And interesting enough, isn't it, that we saw the low at 6,000 close right around this level that we saw before we saw this level of exuberance, this level of irrationality in markets where things were going up too fast. There's no doubt about it. We see it come down, but we don't see it go below that. Interesting enough, have we really seen a low past that level since we've started this correction? We haven't. We have not gone below that big even. I'm going to try to get the specific here. It was exactly at 6,000 on a variety of exchanges. Not even touching the lows before we had the uptrend. And a lot of volume came in there. Because the people who understand markets know that once you've gotten rid of that exuberance, that's usually where you're going to find support for the next upside. And look at it right here. Let's really take a look at this chart here. Ignoring the fluctuations, look at the lows, because the lows are providing price strength confirmation if you think this is going to go up. A low here, a higher low, and a higher low. We might be seeing these periods where we get small rallies and then small corrections, but for the most part, we're wedging in with price here, and we're finding higher levels of support, which, if anything, is one of the most important levels of technical analysis that we can look at here. We are not seeing lower levels of price. And every time we bottom in the market, when we have a correction, whether it be very small or a little bit larger, we're seeing that over the past few months, ever since 2018 started, we have found higher bases than where we found in 2017. Outside of, I guess, again, that peak exuberant period and stuff. Obviously, you're going to correct those. It's going to come crashing down eventually because it's an irrational period of markets. Whereas back here, we were having a much more steady uptrend rather than the exponential gains of December. Okay. Now, we're at a period where volume is low, price is showing signals, we're wedging in, and we know on a fundamental sense, whereas a lot of people are caught up in price action, that's the only thing they're focusing on, we know that the fundamentals are sound, that there's something that could potentially lead Bitcoin to its next uptrend. All we need is what's known as a catalyst. It's a domino in a sense. When we talk about this in traditional markets, we talk about, for example, we've been talking about Italy, we've been talking about Argentina, we've been talking about a lot of European banks like Deutsche Bank, we've been talking about the asset bubble in the United States and across the world, and the real estate bubble, and all these different things. We understand that the fundamentals, when we do our real research, aren't looking good. They're flawed, and they are risky. But we know that nothing will happen until one of those catalysts triggers, until we have something that's going to topple over the domino and start the domino effect with all those other bad mistakes. And it can also go with good things as well. Sometimes you need something to start the ball on the optimism coming into markets rather than the fear. And you really think about reversal in a reversed way as well. What led to a lot of this downside? Well, in a sense, you had obviously you needed a correction. That's obviously a factor. But we had the tether concerns. We had South Korean FUD. We had U.S. regulation worries. We had all these things coming in. India banning cryptocurrencies and whatnot. We had all this fear coming in, and now it's silent. The fears seem to have gone away, and we're only seeing really a lack of liquidity, but higher levels of price action for support. This is the period in market cycles where we look for those catalysts, where things are quiet. Once you've gotten rid of the fear, it goes to silence. And then what do you get next? You get upside. It's just waiting for one singular event, a catalyst. Now, we've been talking about what some of those could be. We've talked about a Bitcoin ETF. That's probably the most predominant one. And we've been obviously talking about a lot of the developments with Circle and Coinbase, and making this a much more liquid market, fixing the liquidity issue and getting people more interested, So we understand that the fundamentals are good. But I want to go ahead and give a good comparison here. And we'll bounce right back to Bitcoin here in just a moment. But to talk about this, because I understand what many people are feeling is that it should have come by now. Okay, many people have that feeling of, I've been holding Bitcoin here. I might have gotten it in December. I might have gotten it earlier. I might have gotten it over the summer or years ago. But I feel...
namely that the CEO of asset management and financial advisory firm Lazard has recently been making headlines after comments suggested that cryptocurrency is contributing to a weakening of the US dollar as a global reserve currency. And so in this article, what they basically say is that there are several factors now weakening the stance of the US dollar on the market when it comes to being the reserve currency of the world. And you have Lazard coming out and saying, you know what, it might very well be the case that times will change, and it might very well be the case that cryptocurrency is one of these contestants and one of these alternatives to the US dollar. Something else that is very interesting is that he also pointed that unilateral policies of the US, that those policies are being a contributing factor to the possible undermining of the US currency. So it's not that he said, you only have one possible reason for the weakening of the dollar, and that is cryptocurrency. No, he said that there are several different factors at play here, cryptocurrencies being one of them, but there are also other factors. So he pointed to a rapid advantages being made in the area of cryptocurrencies, allowing the US currency to be replaced as the global reserve currency. Quite interesting, quite interesting. And cryptocurrencies is naturally not the only factor influencing the popularity and stability of the US dollar as a global reserve currency. However, he argues that still a significant impact has been made. And I would say that the most significant impact of cryptocurrency is not a specific cryptocurrency such as Bitcoin or Ethereum or Dash, that you have one specific crypto coin that is going to replace the dollar. I think the most significant advantage in cryptocurrencies is just the mindset that people are interested, people learn about the central bank system, and people discover that there are alternatives to the central bank system. I cannot say how much I've learned since 2013 when I got involved in crypto, how much I've learned since then when it comes to central bank money, when it comes to just the monetary policies of the world, and how much deeper insight I'm having currently. And without cryptocurrencies, I'm not sure I would even have that insight. So many people who buy Bitcoin learn a lot about, just the finance space of the world by watching Good Morning Crypto, by watching Andreas Antonopoulos. You naturally become interested in this. And of course, in many ways, it might also threaten the position of the US dollar, because you have so many people now actually having insight in how it works and how unstable the system really is at the core. And therefore, this is what I would say is the most significant part the cryptocurrencies are playing. Not that you have one specific coin, but just that people are waking up and people are getting more and more interested.
So what's my opinion on this whole market crash today? I'm personally not that surprised. I kind of thought we would be in the support line. I posted about it a while ago. I think we would have gone using Elliott wave. That was what I was seeing. Not the best structured, but still kind of went that way exactly. Tested the support line. I stopped my shorts after 5%, but I kept it longer. But don't be greedy, just take your profit. As for what I'm doing this. I'm buying the fucking dip. There's not much we can do, just wait it out. See how much it'll bleed. I personally don't believe it's going to go down a lot more. I see a bounce back or a bit of sideways. Probably more sideways than anything else. As for some gainers, yes. Anyone investing in this, great job, you made 1%. As for our losers, shit. Really not looking good across the board. I can't wait for the market not to go according to Bitcoin. I don't know why it follows Bitcoin. I mean, that's a protocol and that's a currency. It shouldn't follow each other. This market's still young, doesn't know what's going on. Just have to wait and see what will happen. Don't forget to follow me on Twitter. And don't forget to subscribe and leave a like if you like this type of content. See you in the next video.